Hi, I'm Lee Granberry, founder of the Granberry Agency. Today, we're diving into a topic that can have a huge impact on your commercial insurance claims. I'm going to talk about coinsurance penalties. Whether you own a commercial building or you own construction equipment or any other type of commercial property, really, understanding how coinsurance works can save you from unexpected out-of-pocket costs. Let's start with buildings. Coinsurance is a clause found in many property insurance policies. It requires you to insure your building or your property for a certain percentage of its total replacement cost, often 80%, 90%, or even 100%. If you don't stay within that threshold, you could suffer a pretty significant penalty whenever you file a claim. Let's look at a real world example. Imagine you own a building that would cost $500,000 to rebuild. Okay, but you bought it for $300,000, and so that's what it's currently insured for. It's insured for $300,000. Technically, if you had an 80% coinsurance clause in your policy, you would have to carry at least $400,000 in coverage to prevent that penalty from applying in the event that you filed a claim. So what does that mean for you? Let's say you file a claim on this $300,000 building. How does that pan out? What does that look like? Let's break this down using the formula. The formula is the amount you did carry divided by the amount that you should have carried. And that equals your coinsurance penalty. In this case, you carried $300,000, but you should have carried $400,000. So 300 divided by 400 is 0.75. Now suppose there's a fire and you sustain $200,000 in damage. You might expect your insurance to cover the full amount minus your deductible, but here's what actually happens. Remember that coinsurance penalty that we factored in a second ago at 0.75? You're going to take that 0.75 and multiply it by your loss of $200,000, which equals a $150,000 payment from the insurance company. As you can see, that's a $50,000 shortfall from what you thought you were going to get. And keep in mind, you're still subject to your deductible after this penalty is applied. So that's one of the ways that a coinsurance penalty can truly affect you in the event of a property claim. But what about contractors' equipment or mobile equipment? Let's look at something like a skid steer. Since coinsurance doesn't just apply to buildings, it can also apply to your mobile equipment. It's important to make sure that you have this buttoned up on that end too. Most of this stuff is going to be covered by an inland marine policy. An inland marine policies almost always have coinsurance clauses in them. Let's look at contractors' equipment. Let's say you recently purchased a skid steer. Say you bought it a year or two old. You got a great deal on it. Replacement cost on it's $100,000, and you've got it for $70,000. So you call your agent, you add it on for $70,000. You think you're good to go. But remember, most of your inland marine policies that cover this type of stuff have coinsurance clauses in them, and yours has an 80% coinsurance clause. What that means for you is that in order for this skid steer to be properly covered, you would have at least needed to carry $80,000 on it because its replacement cost is $100,000. So what does that look like in a claim? Here's how the math works. You insured for $70,000. We divide that by $80,000 because that's the minimum amount that you needed to carry. And that creates a penalty of 0.875. Now let's apply that penalty against a $50,000 claim. 0.875 times 50,000 is a $43,750 payment from the insurer. That's $6,250 you'll need to cover out of pocket on your own. And that's before we apply the deductible, which is oftentimes $1,000 or another $2,500. So again, kind of goes back to the same thing with the building. It's important to make sure that your equipment and your building, your contents, your inventory, any commercial property that you have, that you properly insure it, especially if you have coinsurance clauses in place. So how can you avoid these penalties? Get an accurate evaluation. Always insure your buildings and equipment based on their current replacement cost, not what you paid for them. Review your policy regularly. Construction costs fluctuate, and so does equipment cost. Make sure your coverage keeps up to pace with what's going on in the markets. Work with a trusted advisor. If you're not happy with your current insurance situation, consider reaching out to us. This is something we specialize in, and we'd be more than happy to review your current coverages and tell you where your shortfalls are and where we may be able to help. Don't let coinsurance catch you off guard. If you're unsure whether or not your current coverage meets your needs, reach out to the Granbury Agency. We'll be more than happy to help you review your coverages. You can call us or text us at 601-755-2468. You can also go to our website at www.thegranburyagency.com. There will be a link to a blog post discussing the same topic in the comments section of this video. Thank you for watching. Have a nice day.